Last week's news that the Fed isn't raising interest rates. Lending rates are showing no signs of dropping.
It's more expensive to buy a car, buy a house, or get any kind of loan. So banks are hoping it's the perfect time to save.
And KETV News Watch 7's Bill Schammert gets the facts on your money.
We are talking about CDs. No, not compact discs. Those probably don't hold a lot of value, but certificates of deposit. For consumers, the rate of return on CDs hasn't been this high in years. A trip down the interstate, browsing the newspaper, a glance at the roadside marquee, even a commercial on KETV News Watch 7.
We've turned up the rate so you can earn more.
You can't miss the ads for CD rates across the metro.
People haven't seen rates this high in a long time, and so it's a conversation that we have been excited to have with customers.
We went to First National Bank of Omaha to find out why.
We are able to take deposits from our customers and lend them out back to the community, and so it allows us to continue doing that. That's our mission. Annual
rates are between 5 and 5.5% right now, depending on where you go. At FNBO, it's the same rate whether you want a 3, 7, or 17-month term.
You know, customers have different needs, right? And so part of that is just based on liquidity.
So let's do some basic investing math. If you put $10,000 into a CD at a 5.5% APR, your return would be about $138 on a 3-month term, $550 on a 12-month term, or about $780 on a 17-month term.
Why is it advantageous right now for credit unions and banks to offer these competitive CDs?
Yeah, so great question. I think financial institutions over the last couple of years have seen tremendous loan growth. As we produce those loans out there, we need new raw materials in the form of deposits to fund the next round and the next loans for your neighbors and your family members.
Veridian Credit Union is also promoting its CD rates. They're also north of 5%, something it says it hasn't offered in at least 15 years.
Unique times, and rates have been going up, and so it's been a good time to be a saver right now.
Veridian's Mark Coppadryer says there's a general correlation between the Fed's rates and CD rates, but it's also about old-fashioned supply and demand.
Financial institutions, we're all kind of competing for those dollars right now. And so I think that has as much to do with it as the Fed increasing some of those rates.
There are a lot of other ways to invest, like the stock market. Experts say the stock market usually averages about a 10% yearly return rate, but obviously that's more volatile. If you're curious, over the last 17 months, the rate of return on the Dow Jones is about 1.2%. Bill Schammert, KETV News Watch 7.